I do believe that we are in just a liquidation, that in an asset that moves a lot, if it rallies from here, and let's say it went back to 100,000 by the end of the year, it still would finish up for the year. So I think, again, we're caught in this position where something is now down, 6-7% year to date. And we're all frustrated because this has been an ongoing hood on the market. But if you get through this, I think next year, again, this is about tokenization. It's about the Clarity Act. It's about AI agents. There's a ton of things that are going on. And again, I wrote this and published it in the Substack. And I really do believe that if you look 6 months from now, this sell-off will be looked as something that, hey, I should have just got involved because next year is going to be a great year for risk assets.
Over the past week, the crypto market has experienced one of its most dramatic swings of the cycle. It began early in the week, when global markets went risk-off and crypto caught the worst of it. Concerns about an overheated AI boom triggered a broader tech rout, and as sentiment shifted, the entire crypto market cap slid to around $2.73 trillion. Bitcoin fell back under $90,000, giving up almost all its gains for the year, and more than $1 billion in leveraged long and short positions were wiped out in a single day. That first wave set the tone, but the real damage came on Thursday, when Bitcoin plunged toward the low $80,000 range in what became the most brutal liquidation event since 2022. Institutional flows flipped sharply negative. U.S. spot Bitcoin ETFs saw nearly $1 billion in redemptions in one session, and a single wallet unloaded roughly $1.3 billion in Bitcoin, all feeding a vicious cycle of selling that pushed investor sentiment into outright extreme fear. Though Friday finally brought a moment of relief, it wasn't a full recovery. The structural damage, the shaken confidence, and the lingering volatility are still very much in the picture. But it showed that buyers are still out there, waiting for dislocations and stepping in when the market finally offers value. And that tiny spark of demand is what sets the stage for today's discussion. In his latest discussion with Anthony Pompliano, Jordi Visser, a renowned macro investor with over 3 decades of Wall Street experience, argues this isn't a structural break. It's a liquidation inside an asset class that naturally moves fast. He reminds investors that even after this drop, Bitcoin is only down a few percentage points year to date. And if it were to rally back toward the 6-figure level by year-end, it would still finish positive. With Bitcoin near 7-month lows and the broader crypto market under immense pressure, the key question for investors isn't just how low prices can go, but why they've moved this way in the first place. Jordi Visser argues that much of the panic is tied to liquidation events and speculative sentiment rather than structural weaknesses, highlighting ongoing drivers like AI innovation, tokenization, and regulatory clarity. But what does this mean for long-term positioning and risk assets heading into 2026? Later in this video, Raul Pal provides a detailed historical context, analyzing previous rapid de-risking events and what they could imply for today's market. Hit like, subscribe, and comment below. The discussion ahead could shape your strategy for months to come.
What's amazing about this one, and what I think is both surprising but also enlightening, the S&P is still only about 5%, 5% off all-time highs. So when we went through this, and you're naming how sentiment in some measures is lower than it was on Liberation Day, yet we're nowhere near that in terms of just the S&P fall. So this has really been speculative retail names, and obviously Bitcoin. These have been the areas. And for everyone who's also lost money in altcoins, this is all of crypto. So this isn't just there. But I will say this, for everyone who's watched me here or on my weekly, I always say the same thing. And I think it gets boring to people, but I really do believe that we will be climbing a wall of AI worry forever. And I really do mean forever. Behind the scenes, as you know, we're seeing speculative names fall off, and I've highlighted that I created an index which had the names that I think were heavily speculated on, that really didn't have any revenues, that were based on things like nuclear, which may be a solution 5 years in the future, but nothing in the near term. And Bitcoin obviously falls into that camp where it doesn't have a normal valuation side to it. So we're at a point where people have basically bailed out for the time being, and they're getting stopped out. And as someone who, let's say, I had some really nice trading profits going this year until recently. And then about 2 weeks ago, I started to increase my, my regular buying of Bitcoin, of which there's always regular buying. Then I started to doing some increased buying below 100,000. So, between MicroStrategy and Bitcoin, they've eaten up a lot of my semiconductor profits and now my Eli Lilly profits. And we're kind of sitting here and I can feel that the narrative, as prices are going down, I'm seeing more and more panic on the AI side, more and more people kind of beating their chests that this is artificial intelligence unwind and that the bubble is popping. And that's where this is really going to come down to it. I don't hear many people when I speak to them that use AI or that do as much research as I do across kind of what's coming. And I just feel like in a week like this or a month like this, a lot of this is just losses on top of losses. We were going to see corrections. That speculative name basket has given up the entire year, and it was up significantly. Bitcoin's given up the entire year. We've knocked retail out. So I wrote a piece this week that there is light at the end of the turbulence. I wrote one with a similar title back in Liberation Day, and I hate for people to ignore it. But the message is the same, which is when those fear and greed index get to these low levels, my historical kind of belief is unless the economy follows it and goes down like it did after the housing bubble and like that, that's the only way that it's justified. If not, and we're in a bull trend, and I will remind people, every market around the world is up double digits. So even the S&P 500 and earnings growth is happening faster outside the US than it is inside the US. And US earnings are growing faster than what the market's up this year. So under the hood of everything, AI is still pushing things forward. We'll find a bottom in 6 months from now. People will look back and really not remember the panic that ensued. So I'm not really that big into seasonality, particularly in the environment we're in, but I do. You did make me think about one thing. So let's go back to the fact that the fear and greed index has gotten down to these levels. And I want to use an analogy for people to understand, to connect that back to what I said, that you're going to be climbing a wall of worry for a long time. Anyone who thought that all of a sudden, the economy's going to get better, meaning everyone's going to be doing well, that doesn't happen in a world of AI. And this is the thing that I've talked about, where the K-shaped economy, if you want to use something, imagine if we didn't have weather cycles, meaning seasons. So seasons, to get back to your seasonality, let's assume it could snow in the summertime. And let's assume we didn't have the weatherman to tell us what was coming. So you drive your car one day, it's San Diego outside, it's 80 and beautiful, and the next day it's 22 and there's 6 inches of snow. With seasons, you get the time to prepare for the snow. You get to go through it. In a world of AI where we have a K-shaped economy, I really do believe the seasons are going to be shorter, meaning they're going to be 1 month or 2 months. And out of nowhere, you can make a bearish argument. And what people have to understand, this fear and greed index is about narratives. You see that in the University of Michigan consumer confidence level, which is at all-time lows. And so I've highlighted before that the all-time peak in UMich consumer confidence was in March of 2000 or December of 99, that period in there, which was when everyone was doing well. This is a very different time period where we have a K-shaped economy. And in a K-shaped economy, it's very easy for people to get negative very, very quickly. When you're very polarized, that means it starts from half the country hates the president. It's a very, very different situation. And I think as long as we're in a K-shaped economy, people have to realize that that situation creates these issues where people can get negative very quickly. And I think AI is forcing this. Exponential innovation did it. And so that's why I keep saying to people, at the end of the day, what'll matter for AI is NVIDIA blew out numbers this week. There's nothing wrong with what's happening with AI. Then you add in that Gemini came out this week, the best model ever. And it's amazing what it can do. You're continuing to make progress. You're going to continue to have profit margins going higher. People just are going to have to get used to this trading activity. And I'll say it again. I think retail is better positioned to deal with this. And I think the crypto space is as well. I looked at the market. I saw it was up, 1.5%. And then about 2 hours later, I looked and I'm like, wow, we're down 1% now. That doesn't happen too often. And then I read this morning and saw some posts on X that went back and highlighted that there's only been 3 other times in the last 30 years that the S&P or the spiders did what it did yesterday. So for SPY to be up over 1.5% and then finish down over 1.5%, there were 3 other times. One of them happened to be the day that I wrote my light in the end of turbulence, which was back in April of this year. And then the other 2 times, believe it or not, were in October of 2008 after Lehman Brothers during the melee. And again, markets rallied from those points both times. Now, in terms of 2008, that was not the ultimate bottom. We continued to eventually fail and go lower. But back then, the economy was going into a recession. And I think that's what I'm going to say is, what that represents to me is, yes, that was a bad sign. And if you're a trader, the way that I start doing things, in fact, I texted you this week saying, I think the bottom's in for Bitcoin. It fell another 9% since I've texted you that. So that was wrong. And again, I think we're in that mode where they're searching for where the pain will be and where we'll get forced selling. When you get into scenarios like that, including 2008, I will tell everyone, until we actually see kind of a, let's say a 4-hour big white candlestick where we're down and we go straight back up, then you look for the retest. And on the retest, you want to see if the RSI divergences are there. And we don't have any signals in that yet. But I think every day now I'm watching for trading signs where I can, let's say, triple the amount of money I'm putting into Bitcoin. And some of the other names, although the semiconductor names and the things I still like for next year, they haven't fallen as much. So really, when you're trying to go bargain hunting right now, aside from Bitcoin, I really can't find anything that I personally want to buy. And that says to me that this has been more of a healthy move lower, not something more panicky.
Jordi makes something very clear. This downturn isn't broad, it's concentrated. The S&P 500 is barely 5% below all-time highs, while speculative retail names and crypto have taken the brunt of the selling. To him, that divergence is revealing. It shows a fear-driven unwind, not a fundamental collapse. He calls it climbing a wall of AI worry. In other words, the fear isn't about Bitcoin. It's about the world changing too fast. AI is compressing economic cycles. Sentiment can flip in a single month. And in a K-shaped economy, where some people thrive and others struggle, the negativity spreads faster than the data itself. That's why fear and greed indices can hit extreme lows even while global markets are still up double digits this year. What Jordi is saying is that people are trading the narrative, not the underlying fundamentals. Nvidia is printing record numbers. Gemini just released the best model to date. Innovation is accelerating, but sentiment is collapsing. A combination that historically marks bottoms, not tops. Now, we move to Jordi's deeper point. The 80% drawdowns, the maturity of Bitcoin as an asset, and why this sell-off feels fundamentally different.
We've already had 4 80% falls in Bitcoin. So let's not stop at 30. It is an asset that historically has been able to lose 80% of its value and then go to all-time highs again, all during its lifespan. So to have 4 of those, that doesn't happen in the S&P 500. And again, there's an element of this of 2 things that I think are important. And this is why I still don't believe that we're going to extend this much further. And I'd like to hear I'm going to ask you a question at the end of this, because I think you'll be able to add some value to me as someone who's looking at data, statistics, and I'm only investing in Bitcoin for one reason. I believe that exponential innovation runs coinciding with it, and that 25 years from now, where AI agents are accelerating what the world will look like in the future, Bitcoin will be a major beneficiary of what's going to happen. So in those 80% drawdowns to get to that level, it was an immature asset. It wasn't very large. It has finally reached a status this year in the crypto entire thing to get up to $4 trillion overall. I mean, it's a real asset class. Here's the problem. The altcoins, most of them, did not get above the highs that were made in 2021 to 2022. And the reason that's important, and I've mentioned this multiple times, and I still believe this to be true, the dot-com bubble left a lot of entrepreneurs with losses. And whenever things would sell off, the hope would immediately turn into despair and a belief that we were going to go through another one. And the pain of that one was so recent that it scared the hell out of people. The VC world is not coming back to crypto because it also has a lot of assets in there. I've talked about the importance of the private market, and we've talked about that OGs are selling. And now everyone that's been moving money for portfolio diversification reasons inside IBIT and some of the ETFs, they're starting to get a little shaky and wonder why they've done this, and they're starting to sell. So the problem is you run into this situation where despite all of the good structural news, all of the innovation news, all of the entrepreneurial hopes, and the administration getting to the Clarity Act, I still believe this stuff is going to be good, but it needs to start holding somewhere in here, and it doesn't have to be a particular level. We could fall 50% off the highs. I remember saying 2 weeks ago, we might get to 80,000. Well, we did. We got to 80,000. I still think there'll be a day when it reverses back higher. And this is where I wanted to ask you a question that I think for the people that have known me a long time that watch us, and probably the people that have known you a long time that watch you, you must have some feeling or insight that there is some kind of forced selling that was triggered by some event. I'd love to hear it, and I'm sure other people would too.
I think the short answer is I don't know, and I don't think anyone really knows. The maybe two most credible rumors, if you will. The first is on October 10th, when there was the big liquidation. If people remember, went from like 120, 122,000 to like 106, 108, something like that in the span of a couple of hours. That was the bigger liquidation than during FTX or any of these moments. I think it ended up being something like 19 or $20 billion of leverage. Somebody blew up. Who is it? How much? What is the contagion from that type of event? Right? You know, kind of what all the like something happened on October 10th, which is right about when we went from the top, and we've just been down only since then. And so you've got some sort of selling. Now, there are people who will look and say, oh, on Binance, people are selling at 9:30 every single day. It must be some sort of, programmatic suppression, blah, blah. I think that there's a lot of folks who are smart who say, well, actually, they're probably just selling through an OTC provider. The OTC provider is, essentially collecting all of the orders, and then they're executing throughout the day. So I think that there's a blessing and a curse. The people in the Bitcoin and crypto world, they actually understand the technology and the assets really well. They don't have tons of experience in the traditional financial system compared to traditional folks. And so you get a lot of like rumors and speculation and like assumptions and frankly, just like they don't understand how the systems work, which is an overgeneralization. There's some people who do, but for the most part, traditional finance understands it better. So that's one, is there's been a blow up. The second thing is, I don't want to say who said this. I do not think that this is probably the thing, but it was so outlandish that I had to hear more. There's a person in the Bitcoin community who is very well respected who said, well, it could be government organizations who are being told that they need to take any Bitcoin that they have seized or have access to and put it into the strategic Bitcoin reserve. But that means that they would be giving up the value. So if you have, $50 million worth of Bitcoin and they're saying, give it to you, you would lose the $50 million in your like department budget. And so instead they're choosing to sell it so they don't have to hand it over because they get to keep the $50 million. Again, this person does not work in the government or whatever, but like they're in the know, right? And so I don't know where they got that information from, but it was a interesting theory, maybe that maybe there's some credence to it, but I hadn't heard that one. My guess is the October 10th. That's like the most credible, realistic thing. Is somebody blew up, there's contagion, and we go down. Now the question that I think I have is, we've seen this before, but usually the liquidation has not been over a month and a half. It's been pretty violent. It's kind of like a market sell order almost, right? And so if you look at the capitulation point of FTX, we were kind of in a bear market, and then you got that final capitulation. This doesn't feel like that. This feels almost like controlled to a degree. And so it's left me thinking there's some piece of information we don't have that in hindsight we'll be able to explain what's going on right now, but we don't know at the moment.
Yeah. Only other thing I'll add, and again, I'll show this over the weekend. So I've highlighted that on the retail side in the US, the correlation between Bitcoin and these speculative names has been 1-for-1 after, and I would say it started more late October. So if you take in that we saw OG selling that forced the the consolidation where we were going sideways and underperforming as AI names were going higher, which to me would have been, again, there was a lot of supply coming to the market that Mike Novogratz talked about in September. Then you get the event on October 10th. You get the fall off, and maybe it was whatever. Let's assume it was $20 billion. That's not enough. The OGs were selling more than that. But then now let's add in a retail pullback that fueled a lot of selling in the US. But one thing that people haven't really thought about, and that's because, again, we have a US show and we focus on the US, but the Asia growth factor has completely collapsed also since September. And then you add in, the Fed's not going to cut in December and all these things. And I think we probably got the sentiment low. The one thing about sell-offs, the sentiment was not super high when we were on October 10th anyway, because people were already frustrated with the fact that it wasn't going up. And then it immediately went down dramatically afterwards. So I do believe that we are in just a liquidation that in an asset that moves a lot. If it rallies from here, and let's say it went back to 100,000 by the end of the year, it still would finish up for the year. So I think, again, we're caught in this position where something is now down, 6-7% year to date. And we're all frustrated because this has been an ongoing hood on the market. But if you get through this, I think next year, again, this is about tokenization. It's about the Clarity Act. It's about AI agents. There's a ton of things that are going on. And again, I wrote this and published it in the Substack. And I really do believe that if you look 6 months from now, this sell-off will be looked as something that, hey, I should have just got involved because next year is going to be a great year for risk assets.
And that brings us to the final piece of the puzzle, a broader macro lens from Raul Pal. One of his latest posts on X reads, "Utterly brutal crypto markets, with relentless, rapid positions, unwinding, and rumors swirling after 1010 of impaired market maker balance sheets, leading to less liquidity and someone blowing up." To Raul, this environment is eerily similar to what we saw in 2021, when in just 4 weeks Bitcoin fell 56%, Ethereum dropped 62%, and Solana cratered 68%, only to snap back violently and push to new all-time highs. He describes that sell-off as baffling, just like the one we're living through now. But the key point in his message is this. With the macro backdrop still so positive, it is hard to think that we won't see something similar here, a sharp recovery. The current price action is showing no signs of letting up yet, even though we are massively oversold, but having lived through huge, rapid de-risking events before in many markets, this too shall pass. With sentiment so low and reality so far from our expectations for the bull market, it's easy to accept defeat and slip into despair. But as Raul Pal has optimistically noted in his post, this too shall pass. The rest of the post reads, "My strategy is to add into these sell-offs offs, but I'm okay with large swings in P&L in a long-term multi-year trend, as I've explained many times. But everyone's circumstances and time horizons are different. Good luck out there. It's ugly and made harder by the lack of actual negative news outside of price. Try to get away from your screens if you can and get into nature to distress." Raul's not sugarcoating the pain. He ends that tweet by acknowledging how brutal this type of volatility is for every investor, no matter how experienced. But he's reminding us of something that aligns almost perfectly with Jordi Visser's thesis. Nothing in the macro environment suggests a structural breakdown. Liquidity hasn't vanished. Innovation hasn't stopped. Institutional flows haven't disappeared. What we're seeing is forced selling, not fundamental destruction. Put simply, this moment feels chaotic because some piece of information is missing. In hindsight, we'll see what triggered it. But historically, when liquidity is expanding, adoption is rising, and innovation is accelerating, these sharp liquidations resolve the same way, with a reversal so aggressive that most people never manage to buy back in. If you found this breakdown useful, make sure to like this video, subscribe to the channel, and leave a comment with your thoughts on where Bitcoin and crypto are headed next. Your input helps shape the conversation and ensures you don't miss any future analysis as these markets continue to evolve. Thanks for watching, and see you in the next one.